They say that diamonds are a girl's best friend. Being the most popular gemstone on Earth, I think it is easy to say that diamonds are everyone's best friend. Our next presenter, Mountain Province Diamonds, ticker MPVD on the TSX and MPVDF on the OTC, is a notable player in the field, has a joint partnership with De Beers, and operates one of the world's largest and richest new diamond mines, Gaucho Quay, located in the Northwest Territories of Canada. Joining us on the call today, it is my privilege and pleasure to welcome the CEO of Mountain Province, Mr. Mark Wall. Mark, thank you again for your time and energy to speak with our community today. The floor is now yours.
Thanks, Chris. Nice to see you again. Before we kick off, I'll just talk a little bit about this screen in front of us, these blue diamonds. It's an interesting fact that many of the diamonds that we mine at the Gaucho Quay mine in Canada have this fluorescent aspect to them, where when you put them under infrared light, they turn blue, which is what these are. And when you're in normal light, room light, sunlight, daylight, they are regular, clear diamonds. So it's a pretty cool aspect that the diamonds from our mine have. The cautionary forward-looking statement, I'm sure everyone's familiar with, but of course, feel free to go back and read this in some detail. So what about Mountain Province Diamonds? Mountain Province Diamonds, firstly, I'd say jurisdiction matters. We're a Canadian diamond mining company with a large operating asset in the Northwest Territories of Canada, as well as a very large exploration property also in the Northwest Territories of Canada. We have a strong partner in Anglo American, or the globally recognized, is a division of the multi-billion-dollar mining company, Anglo American. We've got really interesting growth potential on the joint venture property, which is a property we have funded and financed and owned 49% of the infrastructure on the property, and De Beers 51%. We have a joint management committee of 2 people from De Beers, 2 people from Mountain Province, and that committee makes all of the strategic decisions for the mine around budgeting, people, etc. And we're a business that is, compared to other mining companies who haven't yet built their infrastructure, we're lower risk because we've already spent the money on the infrastructure. It already exists. We're already using it, which is as a producer. And then we still have the exploration upside, but that is where we would use the same infrastructure because our exploration assets are very close to the existing operating mine. We've got an industry that, like all resource sectors, there is a cycle, and it's been a difficult cycle for the past few years, but that cycle has turned, and we're very in a good part of the cycle that is moving in an upwards direction with strong diamond prices. That's being driven by a range of things that I'll talk to more in a moment. We've refreshed the team. I've refreshed the CFO with Steve Thomas, who was the CFO for De Beers Canada for 10 years, knows the market very well. April, I brought in as the Chief Sustainability Officer. She's very experienced in the North, very passionate. Tom, our Head of Exploration, highly technical, PhD, great experience in finding kimberlites, and Matt McPhail, our Chief Technical Officer, as well as Reed, who's a very experienced diamond marketing person, was really heavily involved in the Argyle Pink Diamond program. So a really strong team. And then we've got this large exploration property with all kinds of exploration upside that, again, I'll talk to more in a few moments, Chris. So what's our strategy as a company? What things are we focused on? The first one should be any mining company, which is optimize the business, focus on safety and health, focus on costs, focus on throughput production, look for opportunities to increase throughput, drive down costs. That's been especially challenging through the COVID period, and there was impacts to all of the Northern Canadian mines during the COVID period, specifically around maintenance. drive sustainable development. We've been doing a lot of work around the opportunity to sequester CO2 from the air into our waste rock, which is kimberlite. And we've been working with the University of Alberta, the University of BC on that, as well as we've been focusing on community relations, environmental programs. We recently won a national award for a joint environmental monitoring program with the Ni-Hadi-Ha in the Northwest Territories of Canada. The capital structure has been the main game in town, where we have bonds coming due on December 15. We are somewhat fortunate with our bonds. Our largest shareholder and stalwart supporter of the company, Mr. Dermot Desmond, who is an Irish billionaire, also owns around a third of the debt. And there's between three holders, there's about 80% of the debt is held, and those three holders are all very strongly in both Diamonds and the company. So we are optimistic as we work through that. Extending life of mine, we've had great success this year that I'll talk about. And finding new mines, we've had the first discovery-based exploration program for many years for the company, with some very interesting results that I'll talk to. Just to briefly talk about scale, Gahcho Kué is the fourth largest diamond mine in the world by production. And it's obviously in Canada, as we've said. Several of the other large mines are in Russia, and there's a whole complexity around Russian diamonds and the supply of Russian diamonds into the Western market that most people are familiar with. So on the diamond, more generally, what we're seeing on a production perspective, over the past several years, production has come down. Why has it come down? Because during the down cycle of the commodity, there was very little investment in growth, and there wasn't new mines, there was depletion of mines. So we're down to around 116 million carats a year, and around a third of that comes out of Russia. And what we know is that the Western markets that are our markets predominantly, which is the United States, Canada, Western Europe, have made Russian products persona non grata. We also do sell products into certain jewelers in China. Interestingly, those jewelers do not want Russian goods either. So we're seeing an impact of that supply shortage. There's also been discussions of an inflection point in 2024 where the global demand will be more than the global supply can service. So we're waiting to see what will happen with that. The headline is we are optimistic about the direction of the diamond market. This company produces good margins. It's a strong business. We've produced strong EBITDA in 2021. We've produced strong EBITDA in H1 of 2022. We've created 22 cents per share in earnings in 2022 for a company with a share price in the mid 50 cents. So we have very good margins, and we're low capital risk because our capital's sunk. The $1.1 billion to build the asset has been spent, and what we're now looking for is incremental opportunities to increase the life of the mine using the existing infrastructure. We're very proud of our ESG performance. Around 32% of the employees at the mine are Canadian Indigenous First Nations. That is not easy. That's a program of recruitment, of training, of managing logistics, etc. So we can do better, but 32% is a very good number. We also spend around $85 million a year on Indigenous controlled businesses in our supply chain. So about 1/3 of the supply chain spend is directed towards Indigenous owned businesses. Again, something that we're very proud of and that we'll continue to work on. A bit on the capital structure. Again, interestingly, we would say that a trailing 12-month earnings to price of 2-to-1 is very low. And we believe that we're undervalued as a company. we believe that as we solve the debt overhang and move forward, that there'll be a balancing out of that. It's a little bit on the production. As I've said, H1, H2 of 2022, we've seen around $100 million of EBITDA. We say adjusted EBITDA, that's really just we sell in US dollars and we operate in Canadian dollars, so there's some unrealized FX. It's not really a big deal, but it is adjusted for that. 2021, we had $135 million in EBITDA. So this is a strong cash generating business. What we did here is we looked at our share of the asset without the exploration upside and without our 100% owned property, including the 20 million carats that are in the ground. And the post-tax, post-royalty NPV is around $960 million for a company with a current market cap in the $120, $130 million range. Again, I think this is just another indicator of the valuation of the company in terms of where it should be versus where it is. Here we see the Hearne pit on the left. The Hearne pit has been a very good open pit, but we've done significant exploration through 2022, and we've made a release around this exploration. And we've discovered a very large ore body that is attached to the Hearne ore body, but is below and to the side of the existing open pit. And we're looking now at doing some more drilling, but also working through what an underground mine with a lower cost bulk mining method would look like to mine this very large additional ore body. Also, if you look at the Tuzo pit on the right, you'll see the pit shell stops about halfway down, just after it enters the really high-grade portion of Tuzo. So we also see concurrently an opportunity to look at bulk mining methods for this for the Tuzo pit in order to significantly increase the life of the mine. So there's about 42 million carats in reserves already, with a great deal of opportunity to further improve on that. That brings us to the larger property. So the 5,025 hectares of the Gahcho Kué mine, which is the T-shape. The larger property is 107,000 hectares. We already have 20 million carats of resource on that property, and we've got lots of opportunity in an underexplored area to discover additional kimberlite ore bodies. This is just breaking down those 20 million carats between the Kelvin and Faraday ore bodies. We've now put a bow around these and left them. We are doing some additional work on the underground mining method in the plan for these and how we would go about it, but we're not doing any additional exploration work, and we're looking at options to bring these into the mine plan of the existing joint venture. So 2022 was a fairly big year so far. We're 9-10 months in. We've refreshed the team, new CFO, ex-De Beers, appointed for the first time a chief sustainability officer to make sure we're really doubling down on ESG. We've appointed a chief technical officer in Matt. So the management team has been very much strengthened. Our relationship with De Beers has also significantly strengthened. We now do joint site reviews with De Beers, and we're very much integrated into the operation itself. We won the national award, as I mentioned, with the Nihar for Indigenous North. We, as all the mines did, we had some challenges early in 2022, and we've developed a recovery plan, and we have worked through those challenges to improve the maintenance and the other things that fell down during COVID. We've updated our 43-101, increasing the NPV by more than $600 million. We also did a write-back of more than $240 million this year. That write-down was done a couple of years ago. We've, as I've said, looked at the carbon sequestration in kimberlite with the universities in of Alberta and BC, looking at how we can potentially gather carbon, atmospheric carbon, and lock it essentially forever in our waste rock. We bought some bonds back along the way, and we're making good progress in dealing with the debt, which comes due December 15. That debt is a hangover of the original construction capital. We've found a new ore body, as I've just said, in Hearne, and we had a really good program of exploration on our broader exploration leases. So just to Chris, to bring all that together, we're in a great jurisdiction. We have a globally known name as De Beers as a partner. We have great relationships with the community and have got really good results in sharing the benefits of employment and supply chain with the community. We believe discovery is inevitable on the broader property. There are just so many indicators there of kimberlites. And then when we look at our NAV per share, if we just take the number of shares and put in some G&A and etc., we come out at around $2.40, which again is another indicator to us that we as a company are undervalued. So Chris, that essentially is the summary of Mountain Province Diamonds.
Thank you. So we have a Q&A feature if anyone has any questions. Mark, very quickly, how often does management actually go see the mines, and how do you actually get there?
It's a good question. Google Maps won't work for you, Chris, as we've discussed. So I live in Calgary. Our head office is in Toronto. So the general manager and I speak twice a week. For me, I can be, if I went in a straight line, I can be at the mine in about 3 hours. And over the last 6 months, I would have done about 8 visits to the mine. So I'm have my own ID card. I'm a pretty well-known piece of furniture at the mine. So I'm there a lot.
Excellent. And then does the diamond industry have a market or an exchange that justifies prices, or do the big players decide that?
It's a really good question, Chris. And the answer is the market decides that. And you can't Google diamond price. So you have different sales methodologies. So De Beers run a sale methodology that they've always run, which I look at as kind of like a hedge, where they put a bunch of diamonds in a box from different parts of the world, different mines around the world, and they have what's called site holders, and the site holder gets given a box and gets told the price, and the site holder pays that price. We run a competitive tender system, so we know exactly how much a diamond from Gahcho Kué, around 500 categories of different sizes and shapes and colors, etc. And we know exactly what the market pays for those. So we have a very, very good idea, but that information is considered somewhat sensitive because of how we do our sales and marketing. So the answer is there is not anywhere you can Google diamond price. It's really market driven. It's a commodity. It's supply demand driven.
I know that you spent some time at Barrick Gold, arguably one of the most famous mining companies on earth. What did you learn at Barrick that you've implemented at Mountain Province?
Well, people matter, I think is really the main one. As the Senior Vice President of Operations in Barrick, I did a number of things, and one of them was fix problems, fix things that weren't going well, wherever they were in the world. And the recipe for fixing things when they're not going well is you need good people and a good plan. And then the good people execute the good plan and things turn themselves around. So it's a pretty simple recipe. So Barrick is a complicated business, but my real learnings from there are good people, good plan, and the rest of it is just interesting.
And then I had one question. What is the biggest falsehood that most people think is true, but is not when it comes to diamonds?
They're easy to find. Well, I would say the
Yeah.
second thing is they're in caret-shaped ore bodies. What we find is we have all kinds of ore bodies. Some are caret-shaped and some aren't. But diamonds are a very interesting. It's an interesting market. I mean, I'm at a gold conference right now, Chris, and it's interesting when you compare diamonds to gold. One of the challenges is pricing, as you've said. You can Google the gold price, you can't Google the diamond price. What are diamonds useful? Is a question that I get. Are diamonds useful? Which is interesting. You get that in a gold conference, but we'll just set that aside for a moment. But yeah, and what I say is, well, we don't make electric cars, or we don't make batteries. We don't produce gold that goes in a vault somewhere. But what happened in 1477, the Archduke Maximilian of Austria presented Mary of Burgundy a diamond ring to express his love and their coming life together. And since 1477, that's predominantly what diamonds have done. So diamonds have joined people, and they've allowed and facilitated the creation of families. So what I say to folks when they say, you know, who needs a diamond anyway? It's, well, batteries are important and electric cars are important and gold in bank vaults are important, but we're proud to produce something in Canada the right way that essentially brings people together.
Well, I was just going to add to that. It was the Queen's funeral for the last 10 days. And the thing that got most people's attention was her specter, which has I believe it's a 500 carat diamond and one of the most flawless pieces on earth. So it's just, you know, my saying when it comes, the way I look at diamonds is I can't explain it, but I know it when I see it.
Yeah, it's just a shame that the Queen didn't get the diamond from Canada, but we missed that boat.
That's true. So there are 7 questions in the queue. We have a couple minutes, so let me see if I can get a couple of them. So anonymous attendee, thank you, anonymous. Thank you, AA. What does CapEx look like over the next few years for these projects? And how do you plan to address the debt overhang? Will you guys have to raise equity?
The CapEx is pretty flat. On 100%, it's around a $20 million level regularly would be the sustaining capital. We've also got capitalized stripping. It depends how you want to slice and dice capital. So there is capitalized stripping, but on infrastructure related capital, you're looking at around $20 million on a 100% basis. So it's relatively minor. On the second part was about the refinancing, I think. So the headline on the refinancing is around 80% of our debt is held between 3 bondholders. One of those bondholders is our largest shareholder, Mr. Dermot Desmond. And those 3 bondholders are all very friendly. And those 3 bondholders are also in discussion with each other. And we in the company, there is a special committee of the board looking at all options for the refinancing with the appropriate financial and legal advisors. And we are very confident that will draw to a close in the not too distant future.
Kyle, thank you for the question. What is your ideal customer base market in US wholesale and retail, wholesale or retail operations?
Well, predominantly wholesale, although because we're selling a product pre-cut polish, so we're selling rough diamonds. So someone has to look at them and decide what they're going to do with them, what the specific use is going to be. We have a contract with Chow Tai Fook, which is the largest jeweler in China, and we supply to well-known names in the North American, European brands. So we're providing into those brands pre-cut and polish. So the uplift of the in the value chain that you get when you cut and polish a stone is not our business, it's the business of the next user. Sometimes that is a third party who then on-sells it into a jewelry firm, or sometimes that is the jewelry firm itself.
And then we have time for one last question. What happens with lab-grown diamonds? Does it displace long-term diamond mining demand? Great question.
So lab-grown diamonds, I guess the way to back into that would be, I call them factory-made diamonds, because that's actually, if you've ever been to where they're made, it's not a laboratory, it's a factory. And about 60% of them are made in China. And there's two real main methods they make them. One is you get a piece of metal, and then you just use a whole bunch of energy and electricity to compress that as much as you can until you eventually get something that is very similar to a diamond. Or the other way is you use methane, and you use a whole bunch of methane and scraps of real diamonds to generate additional diamonds. So there's about 7 billion carats a year with a B of factory-made diamonds that hit the market, and there's around 116 million carats a year of natural diamonds. So you can see that the costume jewelry market, the industrial drilling market, etc., does consume a lot of these factory-made products. And for me, it really comes down to, if you're going to use a diamond as a engagement ring, or as a symbol of a relationship in your life for the rest of your life, you can either choose something that, when a star exploded X amount of billions of years ago, and created carbon, and that carbon made its way to the earth, and then that one carbon atom became bound with 3 more, and then got compressed in the earth about 3 billion years ago, got brought to the surface in our instance in a kimberlite pipe about 500 million years ago, and has never been touched by anything since it came from space except on the outside. Or you can buy something that was made in China with a bit of old metal. That's really, that's an individual choice. I think that the choice for diamonds of significance will continue to be natural diamonds.
Mark, I'm old school. I think diamonds are one of the most beautiful things on this planet. Where can people go to find more information about you guys?
Certainly to our website, and then Matt engages with folks all the time around the business, specifically, and around the balance sheet. Our CFO. I mean, we're all open and happy to chat and engage, and the website is the best place to start.
And apologies to all those people that had questions. If you guys want them answered, just email me, please, at chris@ldmicro.com, and I will forward it to the right people. Mark, thank you again for your time. I look forward to seeing you guys soon at the main event.
Great to see you, Chris.
You be well. Bye, everyone. Thanks again for participating in today's call.